Okay, so the next company on this list is Ford. Now, Ford had a pretty tough earnings report for the fourth quarter of 2021. Ford's earnings came in at 26 cents per share versus the 45 cents expected, and revenue came in at 35 billion versus 35.5 billion expected. Ford said that they missed their production targets because of the supply chain problems related to the semiconductor shortage. Ford said that they'll have to cut production of several key vehicles to deal with the lack of chips, including the Bronco, the Explorer, the F-150, the Mustang Mach-E, and the Lincoln Aviator. Ford's also been working to maximize production with what they have, but what stands out is the shortage must be pretty bad for Ford, at least for now, because they're cutting some of their most demanded and profitable vehicles like the Bronco, the Mach-E, and the F-150. However, not everything that came out was all bad. Ford estimated during 2022 that they're going to earn between 11.5 billion and 12.5 billion in pre-tax profits, which is about 15 to 25% higher than 2021. So this is very good guidance. On top of this, Ford actually came in as the second largest seller of EVs in the US in 2021. And of the 200,000 reservations for the F-150 Lightning, almost all of these reservations so far are converting to people physically ordering the vehicle. Now, when we put this quarter in context, we can see that this was a relatively poor quarter compared to the rest, but we can see that since the new CEO, Jim Farley, took over at the end of 2019, Ford looks like it's headed in the right direction. And when we look at the past 10 years of earnings, we can see that Ford saw a drop in revenue after 2020, but over the past year has turned a profit even with less revenue. Now, Ford hasn't put out a 10K yet, so I don't have the full earnings report as I make this video, but looking at the current forecasted earnings, we can see that the current projections for Ford are for them to grow from 134 billion in revenue and 2.8 billion profits over the last year to 169 billion in revenue and 10 billion in profits by 2024. When we look at this revenue growth charted out, we can see that while Ford is probably going to see a lot of growth over the next couple of years, that growth will come down by 2024. But I think if we look to value Ford, we should use a growth rate between 3% for the bottom end of the range, and I'm going to go with 6% for the top end. I do want to point out that this is a little lower than what I previously used for the top end at 8%, and that's because we now have an extra year of forecasts that see a lower growth rate for 2024. So 3% growth gives us a fair PE value of 11, and a 6% growth rate gives us a fair PE value of 15. When we look at this valuation charted out, that currently gives Ford a 2024 valuation between 28 and 39 per share, which is about 58% and 116% higher than today's share price. I would say that Ford is very cheap, and the stock is definitely a strong buy after the dip. Now, that video that you just watched is part of a much larger video where I covered earnings for multiple stocks. So if you want to see that video, click this right here. And as always, thanks for watching.